We are live, almost bang on time to the minute. Welcome everyone to NFA Live, Not Financial Advice Live, episode, wow, what are we on? Well, we're halfway through the year. So welcome everyone. I'm joined, of course, as ever, by Rob from Digital Asset News. Welcome, Rob.
Hello, everybody. Thanks for having me.
A pleasure. And Ben from Into the Cryptoverse. Welcome, Ben.
Hey, thanks for having me, Guy.
Good to see you, gentlemen. Yeah, it's been kind of a good week, hasn't it? Bitcoin sort of stuck above that 30K level. Everyone's, the sentiment is a lot better. So I think there's a fair bit to talk about this week. Some of it even quite positive. And of course, we may find room to mention Bitcoin dominance as well. It's obviously why Rob is so beside himself with joy at the moment. 52%.
Yeah, 32%. I track it, and we talk about it a lot on the show. I mean, it's doing so well. I mean, it's doing so well for me and Guy that we're able to get nice green screens. Hopefully, I can get a new green screen. Ben is not doing so hot. He is still in his same green screen. So sorry, Ben.
It's okay. I'll survive. I'm used to bare bones setup here.
Times are tough, Ben. Okay, so can I also remind people as well, anyone watching, we've got a few talking points that we're going to go through. If you guys watching have some questions for Rob, Ben, and myself, then please do leave them in the comments, and I will try and pick out a few, and we'll try and answer a few sort of towards the end of the stream. So on that note, let's kick straight off, shall we? Obviously, all the talk has been around ETFs over the last week or so. BlackRock is the big one. We touched on this last week, of course. Fidelity is supposedly lining up its application if it hasn't submitted it already. So there's a lot of excitement around it. And obviously, this is kind of one of the main reasons, if not the main reason, why Bitcoin has poked its head above 30K and even got to 31K a few days ago. So my question to you both is this a potential tradfi takeover of crypto, these ETFs, and should we be worried? Ben, seeing as Bitcoin dominance is so high, I'll start with you. What are your thoughts?
Yeah, I mean, I've always said that in order for the asset class to reach that 10 trillion milestone, for Bitcoin to ever go to 100K, we really actually do need institutional money coming in, I think, to actually reach those milestones. So, I mean, it's a move in the direction of getting bigger pockets into the space. But I also think that it was more or less inevitable. I mean, when you have crypto sort of acting as the wild west for years and years and years, it's only a matter of time before regulation is going to come in and try to curtail some of that. I mean, a lot of that we actually like, right? We kind of like it being the wild west, but it's also kind of recognizing that it won't go on forever, and that at some point, the people with bigger pockets, with deeper pockets, are going to want, a piece of the pie, right? Like, they're not just going to want to sit idly by while a potential new major asset class is born. So, I mean, I do think we're in the beginning stages of, of institutions getting into crypto. Obviously, it's going to start with, more so Bitcoin. And I mean, I think even Saylor announced that MicroStrategy, I think, just bought some more Bitcoin as well. But I mean, look, this was always going to be the path, right? As the asset class grows, it will attract deeper pockets, right? It'll attract, because when the market cap is really small, most people aren't going to want to take the risk on it, right? It's kind of like how a lot of people like to take the risk within crypto. They only really care about Bitcoin, or if they want to venture out beyond that, they might care about Ethereum. It's not like they think that the micro caps don't make any money. It's just that, if you're moving like $100 million around, right, you're not putting it into some micro cap, that was just created a couple of weeks ago. You're putting it into a higher liquid asset. So as the asset class as a whole grows, like we've seen it over the last, decade or more, it's going to attract, people with deeper pockets, as they recognize that the asset class does in fact have staying power, which I think even Powell mentioned not too long ago. So yeah, I mean, it is what it is. It was always going to happen, and I don't really know if these ETFs specifically will be approved, but I do think that at some point in the coming years, like, we will have spot ETFs approved for Bitcoin.
It does feel somewhat inevitable, doesn't it? And I mean, it's interesting that you say, Ben, that you're not sure if these ones will be approved, because again, this is something we discussed last week, wasn't it? It's like, well, BlackRock must surely be kind of privy to information that us plebs aren't. But I remember, Rob, you said last week you were pretty firmly of the idea that that this application from BlackRock wouldn't be successful. So, kind of before I get your thoughts on the sort of tradfi takeover sort of thing, why do you think it will be unsuccessful? Do you just think it's a question of timing, or what is it?
First of all, I can hear everybody booing me right when you said that the ETF won't get accepted, and I just there's a couple of things. First, I look at it like this: if I'm not mistaken, the SEC is still quarreling with Coinbase, and they're going through the legal process. And I just find it was just very interesting, not just the timing, but the custody partner that BlackRock said, you know what, we want to pick Coinbase, the one that is going through with the SEC. It's basically saying to Gary Gensler, like, look, we run everything, and you're going to bow down to us and bend the knee. And not only are you going to bend the knee, we're going to take an organization that you are actively fighting with in court, and we're going to put them as our custody service, and you're going to approve us. And I just think to myself, if Gary Gensler really is control, which I know a lot of people think he is, then yes, he will approve it. But I think in the grander scheme of things, I don't know if it's going to be that, or if Gary Gensler is like on the mindset of the righteous, which is like, I don't want to go through this. I want to protect the consumers. I know everybody's booing me right now. Or if it's more so, he is in line with the Biden administration and saying, look, we don't want crypto to take over right now because it's going to be a hindrance for the dollar. And we want to bring forth our CBDC first. So even though BlackRock owns a lot, and they've got a lot of those that are actually approved, so far, you know how many spot Bitcoin ETFs have been approved? 0. And how many have BlackRock done with crypto and digital assets? 0. So we'll see if it actually works. I would, and I will just say this, I will be happy to be wrong. This will be one of those times where I'm like, great, I was wrong. And everything, works out. But just remember that just because an ETF does get approved doesn't mean that things are going to skyrocket. Take a look at what has happened through all the futures ETFs, starting back with the CBOE on December 10th, 2017. What happened with the Bitcoin price? Well, it tanked because you know why? Because they could short everything. Would the ETF change that? Not for sure. So that's just my thought process on the ETF. Again, happy to be wrong.
I think it's also important to point out for Rob that he was very vocal, over the last several years, that all the other ones were going to not make it, and a lot of other people were very optimistic, but it turned out Rob was right. So you might not want to hear what he has to say about it, but he has been actually very correct on spot ETFs, whether they're going to get approved or not.
Yeah, and thank you, Ben. And then I will say this: they will eventually get approved. It's not like it's going to go on forever. But the question is it timing now or is it timing later? I'm not for sure. So, I mean, I can't, and then this is one thing I'll say is I can't control the events. One thing I can control is the reaction to the events and how I react to them. So if it gets approved, it doesn't get approved. And then also got to take a look at is which way are these institutions coming in? Which winners are they picking? And I can just tell you that with the ETFs, you can see that Bitcoin's a clear winner so far. And then Ethereum would be also, second on the mind. So if you're looking to see like which way the winds are blowing, I don't know if it's Pepe coin. I think maybe for the institutions with the big money coming in, I think it might be more of a Bitcoin Ethereum valuation.
Yeah. And I think you make a good point there, Rob. And as Ben has said, you have your record is up there with BlackRock's. And I guess we have to ask ourselves, like, is this okay? It would be in theory great if it got approved right now. I think there almost certainly would be some significant inflows, but probably not what a lot of people are hoping for or banking on. And I mean, perhaps this just isn't the right time, and we shouldn't be hoping for approval now. What we should be hoping for is perhaps some regulatory clarity for the SEC to get off the back of the industry, and for us to kind of get out of this bear market slump that we're in at the moment. And then perhaps a little further down the line is actually really when we want to see an ETF approved, and that would actually be by far the more optimal time for it to get the thumbs up.
Right.
So perhaps we're sort of hoping for the wrong thing. That said, I still kind of feel I'm just so curious as to why it is now. And as you suggested, Rob, that could be kind of BlackRock squaring up to Gary and the SEC and sort of throwing the gauntlet down, if you like. But I just feel that they must be fairly confident. Otherwise, they wouldn't have bothered. But who knows? And of course, I think there's still a lot of talk about this idea of a tradfi takeover, isn't there? And how I guess a lot of purists perhaps are saying, well, this isn't something that we should welcome. We shouldn't welcome these institutions kind of coming in. And it's like, well, they've been in for a while. As
Right.
you guys pointed out, we've had futures ETFs for a while. Bitcoin futures on the CME marked the top back in 2017, didn't they? So it's not as though this is kind of TradFi's first rodeo when it comes to crypto. So perhaps it's not the right time, but it does, as Ben said, it does feel inevitable, doesn't it?
Yeah, and then you're right. And then I will say this: they're excited about, like Ben said, the deep pockets coming in. But just remember, even though the deep pockets come in, institutions have a really great way of buying up Bitcoin underneath our noses without it raising the price. Remember MicroStrategy, when they came in, they had a very good strategy where they worked with Coinbase custody. And they said, we want to buy this. We want to move the price too much. And the same thing, and actually there was an article with the Fireblock CEO, and he said, what really has moved the price is retail. And you can see that because the institutions come in and they're doing OTC. And I know with the spot ETF, with the spot Bitcoin ETF, it might be a little bit different. But I mean, if you can, even the shareholders letter that was put out by Coinbase for Q1 2023, you can see that the net revenue from the consumer or the volume itself, it's 6x of what retail is. But the actual revenue of where they actually get their funds from is from retail. So I know that institutions are behind the scenes, they're buying up, but it doesn't sometimes move the price. Having said that, there's this great website. It's called In the Cryptoverse, and there's this one chart which talks about how much Bitcoin is actually left on exchanges, and it's actually went the high in 2020, November 2020. It was 16% roughly on exchanges. And now we're looking at a Bitcoin supply of 6%.
Wow.
Or 6. So like when you take a look at it, you're like, man, that's there's not so much on there. So maybe this will be a little bit different. 6.4% as of now.
Yeah. Certainly with that low amount sitting on exchanges, it wouldn't take a huge amount of retail buying to move the price in under those circumstances, would it? But as you say, Rob, I mean, BlackRock isn't going to be going and buying Bitcoin to back the shares in this ETF. They're not going to be going on Coinbase or anything like that. It'll all be done over the counter. And as you say, the price impact could well be minimal in those circumstances. So, yeah, again, perhaps us retail would be the ones actually pumping it on the news.
Yeah.
Okay, let's move on then. We sort of briefly mentioned Ethereum there. I think an Ethereum ETF is still some way away, but something interesting happening in the world of Ethereum over the last few days is this proposal by some devs to increase the minimum stake. The maximum stake, I should say, for validators from a mere 32 ETH to a whopping 2,048, which is quite a jump. So again, this has kind of raised questions, as kind of anything happening with Ethereum does really around centralization and security. So my question to you guys, and Rob, if you'd like to kick us off in this, is this proposed increase in the maximum stake, is that a good or a bad thing in your opinion?
Technically wise, I'm not well versed in all these things. The things that I read about this, and at first glance, you take a look at it, you're like, well, that can't be good, because then the whole thing with the Ethereum Foundation was to let the individuals get in as much as possible to make it decentralized. Now, if you're going to put it to 2048 ETH at today's price, I want to say it's over $4 million you'd have to put in to be a validator. So on that point, I'm like, I don't really see the positivity. However, reading through articles and seeing the pros and cons, I know one of the things they talk about is that for the roadmap and upgrades, for them to do that, it would actually be easier to implement these things with less validators. And right now, I didn't know this, but if you look at Beacon Chain, BEACONCHA.IN, you can see how many validators are there. You know, there's active validators. There's 620,000 active validators, and there's 91,000 waiting in reserves. So, I mean, that is a ton. So I can see where they'd say we want to do this and kind of move forward. But it just seems to me, maybe I'm wrong, and people, you can put this in the comments, but it seems like Ethereum kind of works more and more centralized, and they're kind of bringing it down. And it kind of seems like they're kind of getting it into the hands of the few instead of the many. So when I take a look at this, I'm like, I understand it, but it just kind of doesn't sit right with the ethos of what crypto is supposed to be. But maybe I'm looking at it wrong.
So yeah, so Ben, what are your thoughts here? Because I should say I should reword that question, because it is
The maximum.
It is a maximum stake. Yeah. So I mean, 32 ETH is still, you know, it's still available to your every your kind of run-the-mill holder. But yeah, it still does kind of raise questions, I think, over, you know, certainly, because I mean, I think this is mainly being done or mainly being proposed with big ETH holders in mind, and I think particularly exchanges like Coinbase. I mean, Coinbase, for example, has to run tens of thousands of validators, and obviously that takes up a huge amount of maintenance, I guess, if you like. So this could, I guess, perhaps result in sort of fewer but perhaps higher quality validators, if you like. And Ethereum obviously has, you know, unlike pretty much any other crypto, Ethereum does actually have an enormous degree of centralization in that regard. So, I mean, Ben, do you think this sounds like it could be a good thing?
To me, it's a complete non-event. I think if they were raising the minimum to 2,000, you know, over 2,000, then that would obviously be a big deal, because then it would make it so that most people couldn't actually run a validator. But because the minimum, I think people should understand that right now, the minimum and the maximum is the same, right? It's just 32. So they're not changing the minimum. They're just allowing people to take it up much higher than before. Okay, so in that sense, I think it's more or less a non-event. I mean, if they were raising the minimum to 2,000, then that would obviously make it a lot more centralized, which no one really wants to see, or at least I wouldn't want to see that. But because it's, you know, just to be clear, because it's the maximum that's being proposed, I don't really think it's going to be worth. Or I don't really think it's a major event to think about.
Okay, yeah. Apologies for phrasing that question wrong, because that is a pretty big thing to flag up, isn't it? It's the minimum stake stays the same, so it's still kind of as accessible as it ever was if you're lucky enough to hold 32 ETH. But that maximum is obviously.
Yeah, sorry. You said it right. I just read things wrong.
Oh, right. Okay. Sorry. So yeah, it's I think you might be right, Ben. But I think in a way it could result, because one of the things that I think Ethereum does suffer from is, almost an embarrassment of riches when it comes to validators. And I remember a while back, there was a reported issue. I think they were preparing for an upgrade or something similar. And one of the problems was that not enough of the validators had updated their software. So I think having this number of validators, I mean, again, this is hundreds of thousands we're talking about, but partly because entities like Coinbase and Lido are having to run so many because of that maximum stake. So it does kind of make the network a bit more cumbersome. So obviously, like, this will result most likely in fewer validators, but that could still be a good thing, because we're still talking most likely hundreds of thousands of validators, which you can't say about any other proof of stake blockchain, can you?
That's true. I'll take it. So yeah, I'll take it. It sounds like not a bad thing to do. If we can do a minimum, great. Maximum, why not?
Yeah. I think it's still got to have that. It's still got to be accessible up to a point, hasn't it? And obviously, there's things like liquid staking available as well. So people without the 32 ETH, and I gather it's not the easiest thing to set up an Ethereum validator as well. You know, you do kind of have to know what you're doing, which is kind of put me off from trying to do it. Because yeah, it's not the easiest thing to do. Have either of you guys ever looked into that, into setting up a validator?
Yes. And I took a look at the documentation. I did a video on it, and I just said, I'm not doing this, because, and especially with the whole thing with slashing, I don't want to be responsible for that. And if something goes wrong, so I was like, I'm not going to do this. And it wasn't, I mean, Ethereum, you know, you can still liquid stake and all those things, but for me, it wasn't in my wheelhouse. Yeah.
I've done
Ben, you strike me as the sort of person with that expertise.
Yeah, I mean, I've looked into it. I mean, I've actually run, not on Ethereum right now, but I run validators for Cardano. I have in the past run one for Avalanche as well. But no, I'm not doing it right now for Ethereum, but perhaps that'll change, next year.
Yeah. When ETH makes a comeback, perhaps. Okay, let's move on then. FedNow. We've just done a video about this, which we're going to put out fairly soon, I think. We're kind of waiting for the Fed to give us a bit more information about when FedNow is going to be rolled out. This is going to be something that should affect you guys and everyone else in the United States at some point in the next few days. It's scheduled for July. So FedNow is going to launch very soon. The headline from the Fed is obviously that it's going to promote efficiency. Not everyone is overjoyed about the onset of FedNow. So, from your experience of it, guys, do you think it's going to be a good thing? Do you think it could increase the chance of bank runs, and is it just sort of a dry run for a CBDC? So. Ben, what do you think? Have you much experience? Have you read up much about FedNow at all?
Yeah, I mean, a little bit, and we've talked before about, CBDCs in general, and I know the Fed is not coming out and saying that it's necessarily a precursor for CBDCs, but it's hard to imagine that we're not ultimately heading in that direction. Even the president of the ECB yesterday said that they were experimenting, with the digital euro and going that CBDC route. So. I certainly think that is the direction we're heading. And I think a lot of people view it as a positive thing, even though I know a lot of people in crypto, including myself, would not view it as much as a positive thing. Because, you really do sacrifice a lot of privacy via CBDCs. It's not to say that they don't have any advantages. And we did a video where I think Rob was asking us, well, what are the advantages of a CBDC? And we talked about that, and we talked about the disadvantages as well. But yeah, I do think that it's likely a step in that direction. And in a few years, it's probably going to be one of those things where you just wake up one day and CBDCs are just kind of the new normal, like a slow, gradual process that people try to fight. But the end of the day, they're going to do what they're going to do. So I would say we're heading in that direction, whether people like it or not.
Yeah. And Rob, do you think the efficiency angle of it, the fact that we're going to go from in the region of sort of, it can take, I mean, 3 to 5 days if you're sending a payment from one bank to another bank, and FedNow is going to take it down to a matter of seconds. I mean, 20 seconds is going to be the timeout, is going to be the maximum time before it times out. So do you think, I mean, that efficiency is going to be a huge selling point, especially for, especially, I guess, for small businesses and people like that, would you think?
Yeah. So before I get my answer, let me make sure that, because like that last answer I gave was not so great. So let me make sure. So FedNow, the whole thing is banks and merchants and everybody else, they have to sign up for the service, then they can get integrated into the system, and then they can make payments. And they can transfer them instantaneously. Like, I don't know how it works in the EU or London, but in America, if I want to send a transaction to bank to bank, right? I have my options. I can do a wire transfer, which is I have to use my routing number, my banking information, and I can send it to Ben. It costs me $20-25. It's going to take, sometimes it'll say 3 to 5 business days, but usually it takes like 1 to 2 days. So the transaction isn't instantaneous. With FedNow, they're like, you can sign up with us. And I had to take a look at it because, well, let me ask you this first of all. Like, if you want to send a payment to me, Guy, like how would you do it? I mean, obviously Bitcoin, right? But outside of crypto.
Outside of crypto, yeah. That's the tricky one. I guess I would have to use something like TransferWise. Yeah. Because I'd be sending it to you, from UAE dirham to US dollars. Yeah, right. I can only imagine that would take potentially weeks if we tried to do it via kind of regular banking rails.
Yeah, well, you could do it like that, or you could do like, I think you have access to PayPal, right? So PayPal, if it's peer to peer, it's free, but if it's some kind of business transaction, you have to pay 2.9% plus 30 cents per transaction fee. So 3% of whatever. So when you send me $1 million, right, that's 3%. So like with FedNow, how it works is the service actually costs money. I didn't realize this, but everybody who signs up, from what is on the FedNow website, it's $25 per month. They're going to waive it for the first year in 2023 to onboard everybody who wants to do it. And it's $25. And I thought, well, who the hell is going to pay that? But if you think about it, if you're doing wire transfers and things like that continuously, then it would actually make sense because it's only $25 and it's pretty much unlimited. It's like a penny to request funds, and I think it's 0.045 to actually get it back. And then I thought, well, what's the difference between FedNow and using because I don't know if you guys have Venmo or Zelle over there in Europe. Like here in America, we have PayPal, Venmo, Zelle, Cash App. We don't have WeChat. We have the other stuff. So,
right.
FedNow, for if I want to take a payment online, I got to use either Stripe or PayPal or, Venmo really, or Cash App. And if I'm a merchant, I have to pay the transaction fees. But I got to tell you, for me, when I saw this, I'm like, I would never use that, FedNow. But then as a merchant, I'm like, damn, I should use FedNow. I know that's going to be shocking to people. So like, what the hell? Why would Rob say that? It's because, do you know how much I pay in transaction fees for my online businesses? It's a lot. It's like thousands of dollars every month. So if I can take a merchant payment and I'm only paying $25 and then 4 cents per transaction, why wouldn't I use FedNow? And then people say, what about security, Rob? I mean, they're going to know everything. Guess what? They know everything anyhow right now. Anything that I do with Stripe or Venmo or Zelle, guess where that information's going to? It's going right to the IRS. So I understand where people are coming from with FedNow. I know it's going to be kind of shocking, but as like a small business owner, like I would probably sign up for that. I will sign up for that service probably.
Yeah. I mean, I can understand that. I was trying to think of it from the point of view of a small business owner. And, a lot of businesses, a lot of small businesses, I think can live and die by not receiving payments on time. They have they've just completed a job. They've just done someone's garden or fix someone's roof or whatever it might be. They have people to pay, they have suppliers to pay, they have business rates to pay, and all this sort of stuff. And if the payment is held up because of the banking system, that could be the difference between them, not meeting their obligations, them going under or staying afloat. So from that point of view, it does make a lot of sense. But yeah, obviously something like FedNow, it does raise a whole load of other potential problems. One of them, I think, that's kind of timely is bank runs. Now, we've seen a few of those in the US in recent months, obviously with the banking crisis. And I mean, that could have been a lot worse. A bank run could theoretically be a lot worse if people are able to withdraw their money in a matter of seconds, 24 hours a day, 7 days a week, 365 days a year, which is what FedNow is going to be. It will be the payments network that never sleeps. So I guess there is, there's a big risk. There's a big risk inherent there, surely.
But you know how this will, I'm just going to say it out loud. I think that if one of the big banks, let's say whatever happens, there's a run on the big banks, it'll be amazing how FedNow service will magically go down at that point. So if you see some kind of like negative news about JP Morgan, Bank of America, Wells Fargo, and there's a run that's starting and the Fed can see it because they can see the transactions, it'll be amazing when they're like, oh, you know what? Something happened to the system and it's just not working. So go the old way, 3 to 5 business days.
But I mean, that leads us down the path of programmability, I think, which is this idea, which I think, which Fed officials kind of have discussed, this idea that in an emergency situation, they can maybe not shut the whole thing down, but they can impose limits. They can make it, they can stop people from withdrawing for certain periods of time. And once you go down that route, programmability is the big thing that everyone is kind of worried about with CBDCs, isn't it? The fact that they'll be able to, in theory, set spending limits, set saving limits, set all these sorts of things. And I guess once those sort of controls are activated, in the event of a bank run or in the event of some crisis or other, then it's kind of unlikely, or I find it hard to believe that, or it's less likely that they would then be deactivated. Do you know what I mean?
Mm-hmm.
So
yeah, potentially,
I think there's a huge amount of potential risk there. I mean, do you agree with that, Ben? Or I mean, do you think can you see that sort of situation playing out?
Yeah, I could. I mean, again, like my general insight into FedNow is not near. I mean, I haven't looked into it nearly as much as Rob has, but one thing that I also find too that I don't really think Rob mentioned is when you use some of these other services, like if you use PayPal, if you use Zelle, if you use Venmo, and sometimes even when you're doing general bank transfers, there's often like limitations on what you can even send.
True.
Which for me has been an issue on more than one occasion. And then you also have to deal with them, you have to describe exactly why you're sending the transfer. There's a lot of different issues that currently exist. So I'm not really that surprised that we're going in this direction.
Yeah. I think it's, as I said before, I think CBDCs are inevitable. And from what we've seen, FedNow, if FedNow itself doesn't become a CBDC system, it's certainly going to be a kind of dry run for an actual system itself. So watch this space. Well, FedNow is coming to you guys in the States at some point, supposedly in July. Like I say, they haven't actually set an exact date for it, but yeah, keep a lookout for it. I'll be interested to see how it goes down. Okay, let's move on to the last point I wanted to talk about today before we go to the audience. So one of the big winners over the last week or so has been Bitcoin Cash. At one point, it had pumped by over 100%. So my question is, how is it that some kind of, if you like, legacy cryptos like Bitcoin Cash, and I think Litecoin is another good example here, how have they? They've stuck around pretty well, really, since the last bull run, despite the fact that there isn't a huge amount of development going on them. Now, I should say that that's not, that we are seeing development. We did see some notable development on Litecoin last year. They implemented Mimblewimble, this privacy protocol. So it's not like they're completely moribund, if you like, but still they do have a lot of staying power when in an era of a lot glitzier, if you like, projects coming along. So I'm just keen to get your guys' thoughts on why it is perhaps that these two and others have managed to kind of stick around and ride it out. Rob, what are your thoughts on sort of Bitcoin Cash, Litecoin, and their staying power, as it were?
There's if you look at transaction fees, because if you just make things accessible, fast, and cheap, people will use it. That's pretty much what it comes down to. And I know like Bitcoin Cash gets a lot of flack, but if you take a look at the BitInfo charts and take a look at the transaction fees, even in during high congestion times, it's fairly low. It's lower even than Litecoin. Now, correct me in the comments section, but again, I'm looking at BitInfo charts on the transaction fee section. And, you can see in 2018, an average transaction fee or 2017, average transaction fee for Bitcoin was like $30. And then Bitcoin Cash was 32 cents. Litecoin was 68 cents. The next big, massive amount was 2020 in April. Transaction fee for Bitcoin average was $51. Bitcoin Cash, no one's really using it that much. It was only a penny. And then Litecoin was 6 cents. So in that regard, I can see it. And like what you talked about, which was the new exchange that was brought about by Schwab and Fidelity and those things, they listed Bitcoin Cash, Litecoin, Ethereum. And I kind of think that you'll see more of that. But the real question is are people going to actually use it? And is it going to have real utility moving forward? And will people accept it as Bitcoin? I think that's the bigger question. And I don't really know where we go from here. So.
And what about you, Ben? I think one of the attractions of things like Litecoin and Bitcoin Cash are, as Rob pointed out, sort of low transaction fees, and also that's kind of what they're designed to do. Like sometimes you look at these cryptos with these complicated, involved use cases, and you look at Bitcoin Cash and Litecoin, you're like, well, this is for payments, this is for transferring value. There's kind of glory in that simplicity. Would you agree with that?
Maybe, but at the end of the day, the market spoke a long time ago on these coins, and I understand that Bitcoin Cash is up a lot recently, but this pump that has occurred, it's still 98% down against Bitcoin since 2017, right? Like think about that, 98% down against Bitcoin, even after this pump, right? Before this pump, it was down 99% against Bitcoin. And you mentioned EOS. EOS at the current time is down 99% against Bitcoin since 2018. So, I hear these. I understand that people get excited when these things pump up, but you just pull up a chart, like pull up the Bitcoin Cash Bitcoin chart, and it's just a bleeder, right? You call it what it is. It's a bleeder, and you can go back on this chart and find multiple times where it pumped similar amounts and then just faded that rally over the next year, right? It's happened many, many times. And I don't really expect this time to be any different. I'm not saying that the rally for it is necessarily over, but I also don't really think that it has, in terms of what the market has said. There's the narrative as to what's being used. There's also the market. And the market says, well, even after this pump, Bitcoin Cash is down 98% against Bitcoin over the last 5 years. EOS is down 99% against Bitcoin over the last 5 years. Even Litecoin from 2013 is down 95% against Bitcoin. So these altcoins that, that people play with and whatnot, especially these relics, I'm not saying that a trader can't make money on them, I'm sure they can. And, you know, if you bought it and it rallied up 100%, well, then props to you, right? Like, I mean, that's something that you can take credit for. But at the end of the day, if you look at them as long-term investments, what you'll see is not only do they bleed against Bitcoin, they also bleed against Ethereum, you know? And we've seen this play out time and time again. So, and by the way, for the Litecoin people, just so you know, and I've said this before, you know, normally it has these rallies in its halving year. So the halving for Litecoin is coming up in August. And the last, look, n equals 2 is not enough to make a trend, as we know, right? We know that. But I will say, in 2019, Litecoin found its yearly high. It found it in June. In 2015, it found its yearly high, I believe, in July. And the halving in both of those years for Litecoin was in August. So what do we know, right? We know that Litecoin historically, it rallies before the halving, but it fades going into the halving. And then it kind of just stays kind of stagnant until the Bitcoin halving. And then it might actually go back up in a more sustained way. But even Litecoin, you know, I mean, if you think about what it accomplished over this last cycle, I don't even know if it put on a new high. If it did, it was basically just like a double top from 2017. Even though you had Ethereum and Bitcoin putting in new highs, you had Cardano putting in new highs. You have some like Litecoin that didn't. And I don't even know if honestly, I don't even know if Bitcoin Cash put in a new high or not. I will say that, you know, back in 2019, I was talking with a friend, and I was more pro ETH, and they were more pro BCH, and they were both around $200 at the time. But now you have ETH, it's almost $2,000, and you have this massive pump by Bitcoin Cash that only got it to just over $200. I mean, it's still an order of magnitude below where Ethereum is, even with this 100% rally. So, and I'm looking at the chart now, like BCA, Bitcoin Cash, put in a lower high in 2021 as compared to where it was in 2017, 2018. So in 2017, 2018, it went to around 43.50. Think about that for a minute, right? And I know I'm going off on a tangent, but you asked about altcoins. This is your fault. So Bitcoin Cash was at $4,350 in 2017. Over $4,000. People are now getting excited because it pumped to $250. And in the last cycle, it peaked out at $1,600. So as far as I can tell, I might need to get my eyes checked, but as far as I can tell, this is a series of lower highs. And it's also been doing that even though Bitcoin went to new highs, even though Ethereum went to new highs. So all of these, in my opinion, Bitcoin Cash, EOS, they're relics, in my opinion, right? They're just relics from a prior cycle that can occasionally pump, right? We're not saying that they can't. In fact, if history is any indication, they will occasionally see these types of rallies. Like, that's what history shows us. But history also shows us that those rallies eventually get faded. Now, exactly what's the narrative that's pushing it up right now, I don't really know. If I had to take a guess, like my best guess for this recent rally by Bitcoin Cash, I would say, well, okay, it's because it's like a fork, maybe people are speculating, and again, because the SEC has come out and declared a lot of these Cardano as security and Solana as security and Polymatic as security. Maybe people are just speculating on altcoins that they think might not be considered securities, right? Like, maybe that's what it is. And we don't even know if they will or won't be. I don't know. But perhaps that's the narrative driving this move. But if history is any indication, then I would expect it to eventually fade. And a year from now, it'll probably be even further down on its Bitcoin valuation. Just what we've seen. Remember, you asked, not me.
Hey, everybody, before everybody clips that section that Ben was just talking about as far as altcoins and blast it all over wherever they do for social media, Ben, can you remind us of how bad you got wrecked during the bear market in your first time on altcoins? Just give us just how bad it was.
So it's so even last cycle back in 2018, it wasn't even my first rodeo, right? It wasn't even my first rodeo. But you know, I remember in Q3 of 2018, I was YOLOing into the altcoins, you know, and I was like, oh, well, the bottom's in, Bitcoin bottomed, and now the altcoins are going to go to the moon, right? And then we got the dump at the end of the year, and then I was like, well, surely now, right? Surely now, like they're done bleeding. And then I still saw a lot of these altcoins put in new lows, even though Bitcoin didn't, you know, even though Bitcoin didn't in the pre-halving year and in the halving year, a lot of these altcoins put in new lows. And that's why I've said this time around as well, like, you know, I don't say these opinions just because like I want to, you know, be mean or dunk on people that have lost money in altcoins. It's more so like that was me. Like I was that person that used to think that. And I lost, I watched my portfolio go down so much, not only on their USD valuations, but on their Bitcoin valuations. And I was just like, what am I doing? Like, you know, I could have just bought Bitcoin and my Satoshi value of my portfolio would have been much higher than now. That's not to say you can't make money on altcoins, like you can, but normally those sustained altcoin rallies don't really happen until after the halving, right? After Bitcoin's halving, and they can bottom out before then. But even in 2020, there were a lot of new altcoins putting in new lows. 2019, I mean, you know, people say, well, the only reason it did it was because of the pandemic. Well, what about XRP? XRP was putting in new lows in 2019, well before we had any well before anyone was sniffing out the pandemic. So, and that was also well before the SEC was coming after Ripple as well. So I do think we have to remind ourselves that, look, even in a world where Bitcoin doesn't put in a new low, the altcoins can. And what happened just a few weeks ago? We saw several altcoins put in new lows, right? Several of them did. So I've just been wrecked multiple times in crypto, especially the altcoin market. And I was just hoping that I could save one person the pain that I've experienced. Now, of course, what comes with the territory is you know, there's always some altcoins that do really well, especially like the micro caps, like the new micro caps that get launched at any given month, right? There's always something out there that's going up. So those people will always dunk on me. But again, collectively, we're just watching the altcoin market bleed back to Bitcoin, and it has been for basically the last 2 years. And I'm guessing it will for at least a few more months.
Thank you. Guys, what just before we go on, what was it the same thing with you? I always forget because I know you got wrecked a little bit in the last bear market.
Yeah. I mean, I've lost money on altcoins tons of times. So yeah, I fully sympathize with what Ben's saying. And yeah, you know, it's easy to say, oh well, he doesn't like you know, he's a Bitcoin maxi, or he doesn't like altcoins. It's like, no, this is a point of view that's been hard won. So, you know, I think and I think as well, you know, it just shows that people should, when Ben's tone sort of turns more pro altcoin, that's when you guys want to be sitting up and listening, and paying attention, because yeah, he's not going to be, he's certainly not a hype merchant in that regard, which is great. So yeah, it
might only be a few more months, by the way.
Yeah,
really, I mean, realistically, it might only be a few more months that the altcoin market keeps bleeding to Bitcoin. You know, I mean, I actually, over the macro scale, they, you know, a lot of them will just always bleed back to Bitcoin, but a lot of them will probably find some low and bounce off of there. I mean, again, September is kind of like the time frame that I'm targeting as it potentially finding a low. But yeah, you know, the funny thing is like when you're in the bull market for the altcoins, right, and you talk about altcoins, you piss off all the Bitcoin maxis. But when you're in Bitcoin season and you just put on your Bitcoin maxi hat for a couple of years, you piss off all the altcoiners, right? So it's hard to make friends, right? But you know, and when I take off my maxi hat, which I don't really think is that far away. I mean, I think maybe a few months. I imagine I'll piss off a lot of the maxis, right? Because they probably only know me now as someone who's dominance. That's all I talk about is like the dominance, right? The dominance is going to go up. Therefore, they think I'm a maxi. So when I flip the switch, they're probably not going to like me. But you know, I've said before, right? I'm not here to make friends. I'm here to make money. So I don't really care.
That's it right there. golf clap.
Welcome to crypto, where you can be sure you're always going to piss off someone.
Exactly.
That's a good lesson to learn for anyone new to this space. You're always going to piss off someone. I have to say, I was kind of unsure whether, tabling a question about Bitcoin Cash would be met with apathy or strong opinion. The comments have been lighting up. There's a pretty muscular debate going on in the comments. More Bitcoin Cash fans than perhaps I imagined. So yeah, it's interesting. I will say that I was chatting to someone recently who told me that Bitcoin Cash, especially, I think, is very popular in Asia, especially, and I think it's important to sort of consider that view, because we obviously have a kind of Western focused mindset, and it's easy to forget. I do it all the time. It's easy to forget that different regions have kind of different preferences when it comes to various cryptos. And as I say, I gather Bitcoin Cash has a much bigger following in Asia. And I mean, look, it is it does its job very simply, very well. So I can understand why there are people into it, but it certainly does certainly more Bitcoin Cash fans out there than I would have imagined. Okay, so we are just a few minutes away from the hour. I'm just going to see if anyone's kind of put in some questions as well. Another thing I wanted to touch on regarding altcoins, and I think that kind of gives us an important lesson, is, Ben, I think it was you who mentioned EOS, which is kind of another category altogether. There are coins like Bitcoin Cash and Litecoin that sort of tend to tick along a bit. And then there's, at the other end of the spectrum, you've got things like EOS, which was it $4 billion it raised in its ICO?
Yeah, I think it was I think it was the largest one at the time, right? I think it was 4 billion. Yeah. Yeah.
A $4 billion ICO that took place over 2 years. And I mean, look, EOS is still there. It's still kicking around. I think it's in the top, just outside the top 50. 53 on CoinGecko, with 24-hour trading volume of $103 million. And wow. Look, I don't know if there are any EOS fans in the comments, but I mean, there's an example of a project that still kind of sticks around, but has really done nothing. I think Block One, they had a change of CEO last year, and there was sort of noises that the project was going to pick up pace and get restarted again. And that was kind of the last we heard of it, really. So, yeah, it's you have these different extremes, don't you? You have coins that sort of aren't particularly kind of rock star, but then you have these other coins that got so much hype in 2017 and have just done nothing since. But people are still trading them. People are still presumably buying into them as well, which just seems crazy to me.
Or maybe you're like me and you lost your private key for your EOS wallet, and now you don't have access to it. So one of those things could also happen.
Very true. Very true. There are people sitting on huge amounts of EOS there just with lost private keys. Okay, I'm just having a look through. Of course, the burning question that everyone wants answered is, when do we get a Pepe ETF? I think we could be a little way off that. Let's walk before we can run. I'm just having a look through to see if there are any other sorts of questions. Noel asks a good one. When people will vote about a CBDC, and I think this is another important thing to flag up. Just going back to CBDCs briefly, it's one of these things that I don't remember Bitcoin ever being on any party's manifesto back in the UK, and I don't know about you guys over there, but I think one of the things that perhaps people object to about these is that it is something that's just kind of being imposed. We don't seem to really get a say on it.
Yeah, who knows?
Yeah. It's I think that's one of the most legitimate concerns about it. And it's like, well, perhaps if you were to put this out to a popular vote, then you might get an idea of what sort of uptake you'd have for it. And I think people are right to be wary of something that's kind of put upon you supposedly for your own good. Okay, chaps, I think we will leave it there. We're almost on an hour for this week. So Ben and Rob, thank you both for joining me this week. Where will we be next week? Who is hosting us then?
Should be on my channel next week. So
okay.
Well, I'll make sure to ask the pertinent questions to Rob about his thesis on the dominance and all that stuff.
As well you should. As well you should. All right, can't wait.
We'll wind up Rob and get him going on Bitcoin dominance like clockwork. All right, gentlemen, thank you very much for joining me today. Thank you everyone for watching. Thank you everyone in the comments. Keep that Bitcoin versus Bitcoin Cash debate going. It looks to be getting more heated by the moment. Good luck to you all. We will see you next week. Adios.
Adios.